How much would you be willing to sell your accounting firm for? Now, if you're not in the market to sell your accounting practice, you can skip this video. Don't worry about it. If you are, if you've thought about selling your accounting practice, or if you're getting to the point where you're ready to, take it off your hands, this video is for you. Because now here's the thing. You've probably gotten dozens of proposals over the last couple of years of folks that are going to say, hey, I'd like to help you sell your accounting firm. They want to take a cut. They want to give you a comprehensive diagnosis that's going to cost you an additional fee. What I'm going to show you today is how you can do this yourself right now for free. And we're going to actually leverage ChatGPT to help us to do this. I've actually developed a prompt that goes through the two main valuation methods. So we're going to go through the multiple of gross revenue method for the valuation, and we're going to look at the multiple of discretionary earnings method. Okay, so I'm going to give you two ways to evaluate your firm. So by the end of this video, it's not going to be perfect, but you're going to have a good ballpark metric that you can use. I'm going to actually show you how to throw this into a table that's going to give you a valuation score, so you can look at which factors are going to influence the sale of your company the most and which ones the least. And I'm actually going to show you how to generate recommendations based on your specific information on how to make your firm a little more valuable. Okay, well, I'm excited to show you this. And like I said, we're going to use the latest version of ChatGPT with a custom prompt that I've developed. So let's go ahead and dive in. I'm going to switch to my screen here, and let's jump over to our little ChatGPT session, and this is what we're going to do. So what I'm going to do here is, and again, I'm using the ChatGPT 4 version. You can do this on the 3.5 version, but I highly recommend 4 because it's going to be a lot more accurate and it does a lot calculations a lot better. Okay, so I'm going to use the default model here, and I'm going to use a prompt that I'm going to paste in. And I'm going to, let's go ahead and click on Control V to paste it in. Okay, and then let's hit enter. Okay, so while that churns in the background, let me just kind of walk through the prompt a little bit. So the prompt is, help me determine the valuation of my US-based accounting practice using my inputs below. So now the way that I've done this, and again, I'm gonna, if you want a copy of the prompt, just let me know. You can basically copy and paste this. The way I've done this is super simple. You're going to use key bits of information here, and these little brackets here, you're basically going to put in your own information. So for example, annual revenues, you'll just put in what your annual revenue is. In this case, mine is 1.2 million. Annual net profit, and so you type in what it is, 750K in my case. Net assets, 200,000. Total liabilities, 50,000. Owners, number of owners, that's 1. FTEs, or full-time equivalents, and so you put in the number. So I have 1 tax manager. Part-time, 2 tax preparers, 2 part-time tax preparers. Market conditions, stable with steady growth. So why did I include that? Because firm valuation, one of the metrics that it looks into is, where's the market going, right? Is it good? Is it bad? Is it stable? Right now, I think the industry is pretty good. It's pretty stable, and I think we're going to see some tremendous growth based on a lot of the things that I'm coming across. Client base, mostly small to medium-sized business, low client churn with high degree of repeat business. Average revenue per client, 5,000. So these are a few things that you can pop in here about your client base. You can include a little more if you have it. Again, the more information you throw in, the better. If you can generate this, try to get your average revenue per client, because that's going to be important in the metrics that I'm going to show you later. Years in business, 10 years. Competition, moderate. Okay. Specialties, real estate investors, tax planning. Now, this is I guess the most subjective part, right? Because it looks at 2 things. It looks at what niche are you in, and it looks at some of the key services that you provide. I could go and I can talk about, if I wanted to include other things like outsourced CFO or bookkeeping and a bunch of other services, I can include that. For my intents and purposes, and for this, I'm just going to throw in just the key service here in my key sector, so real estate investors. Growth rate, steady growth of 15% annually. And as an accountant, you should know that number. So if you don't know how to get that, that's a whole nother story. So now let's look at the second part of this. So number one, explain step by step how you determine the valuation, including any calculations, estimates, and assumptions. All right. Number two, create a tabbed valuation overview table based on the information that I have provided with a column for valuation score. The score will be 1 to 100 based on how important each input above factors into the valuation. Then show a final valuation score in the last row from 1 to 100 as an aggregate of the other scores. Use the multiple of gross revenue methodology. Okay, I know that sounds like a lot, but it's actually going to get a lot easier. And don't worry about it. Basically, all you're doing is with this prompt, pasting in your information, and you can totally take this prompt and it will give you your own generated unique results. Okay, and then lastly, number three, based on my inputs, provide detailed recommendations to increase my current estimated valuation in a valuations recommendations report using Markdown. And Markdown is just a fancy way of saying, hey, do bold this, make like a larger heading. Sometimes it works, sometimes it doesn't. Let's see if it gets fancy or not. We'll find out in a second. Okay, provide two valuation estimates. So remember, I want method number one is going to be the multiple of gross revenue. And number two is going to be the multiple of discretionary earnings. And we'll talk about what each of those means in just a moment. Okay, so I hit enter. Now it's going to go into the results. So part one, explanation of valuation determination. Let's start by calculating the business valuation based on two methods, multiple of gross revenue and multiple of discretionary earnings. Multiple of gross revenue. So this valuation method is based on a multiple of the business's annual revenues. The multiple can vary widely depending on the industry, business size, growth prospects, and a range of other factors. Accounting firms typically have multiples between 0.75 and 125. Okay, and that's 1.25. So for business, given the stable market condition for your business, given the stable market conditions, steady growth, and a specialized niche, and a low client churn, will assume a multiple of 1.2. Okay, so it's already kind of factoring the score. I'm on the higher side of the multiple, but it's going to give me a reason why it gave me a 1.2. Okay, and like I said, this is not perfect. There's other factors that go into this, but we're gonna get ballpark numbers here. Multiple of discretionary earnings. So this is the other valuation method. Honestly, the multiple of gross revenue, I think, is the most popular. Some folks are looking at the multiple of discretionary earnings, but I'm going to show you how to do both here. So discretionary earnings are the earnings of the business with non-operating business expenses, non-cash expenses, one-time expenses, and the owner's total benefits added back in. It represents what's available to the owner and benefits assuming the business is debt-free and all capital equipment needed to run the business is in place. Given that you're a sole owner and your only FTE is a tax manager, will use your net profit as the discretionary earnings. The multiple in this case can range between 1 and 3 depending on factors like the ones mentioned above. For your business, we'll assume a multiple of 2.5. Now, there's other things that I didn't include. So, for example, the fact that it's 100%, cloud-based, that is a major factor. The fact that there are recurring revenue subscriptions, that is another factor. Okay, so this is basically my first version of it. It's going to get a lot more comprehensive, but I wanted to just kind of get this out there. Obviously, I would love your feedback as this gets a little more intense. Okay, so part two, valuation overview table. So we're looking at the input factors and then the valuation score. But remember, I told it to give me a score, an aggregate score from 1 to 100. So the way that it judged this, basically, so the higher score, so annual revenue's got a 90, annual net profit, 95. Those are probably the biggest factors that's going to go into an evaluation. Then it has smaller factors, total assets, 65, total liabilities, 70, owners 80, FTEs 75, part-time 75, market conditions 85, client base 90, years in business 85, competition 70, specialties 80, growth rate 90, okay, and then final valuation score 83. Okay, so a healthy 83 out of 100, that's not bad. Let's kind of get a few more details on what's going on. But I want to get some recommendations. So now I'm at the point where it's like, okay, well, I have a ballpark score. It seems pretty good, but is there anything that I can actually do to make that score better, to make my firm more valuable? So this is the last part, the actual valuation recommendations report. Okay, so to increase your current estimated valuation, you could consider the following strategies. Number one, expand your client base. Diversify your customer base to mitigate the risk of losing key clients. The more clients you have, the less impact each one has on your overall revenues. Okay, so this is pretty much a common sense statement here. Develop more specialties. By broadening your range of services or developing more specialties, you can appeal to a wider range of clients and increase your potential revenues, which is certainly the case. So, for example, if I'm doing real estate, maybe I want to dig into some other specialties around that particular industry there. Reduce liabilities. By reducing your debts and other liabilities, you'll increase the net worth of your business, which can improve your business's valuation. Number 4, invest in more assets. More assets, especially ones that can generate income or increase efficiency, can increase the value of your business. Number 5, increase your growth rate. The faster your business is growing, the higher the valuation. This could be achieved by attracting more clients, increasing prices, or expanding into new markets. Okay, so then it gives the valuation estimate. So this is kind of like quick back of the envelope math of how it came up with these two valuation methods. So the multiple of gross revenue, the way it got that 1.44 million is basically 1.2 million. So that was my total revenue times 1.2. So that's the 1.2 multiple it gave me. And method 2 is that multiple of discretionary earnings. So the way that it came up with the 1.875 million is the 750,000 in net times a factor of 2.5 to get that number. Okay, so and then it says these are estimates based on actual market conditions, buyer interest, and other factors that could affect the final price if you were to sell your business. So like I said, there's tons of other factors, but these are some pretty rough estimates. And really the purpose of this exercise is to get you thinking, if you're going to sell your firm one day, this could help you in terms of like thinking about a possible merger, a possible acquisition, if you're selling, if you're retiring, if you want to sell to your other partner. This is always something good to have and something to know, right? So, the next time you get that call and someone's asking about, selling a firm, you come a lot more empowered, right? You know what questions to ask, right? You want to get the most for your firm. So this is kind of like a basic way to start that internal conversation, and then by the end, you'll have a lot more resources and knowledge on how to come up with those two numbers. Okay, so hopefully this has been helpful, and I will see you in the next video.